Welcome students, welcome to lecture number 16 where we will be continuing with module number 3 under subject financial management. So as we have already seen in this particular unit, that is module number 3, sources of financing and cost of capital, we have already covered the sources of financing under lecture number 14. We have seen cost of capital, the basic concepts under lecture number 15. Okay, so we are now remaining with the theory as well as practical part to be covered under cost of capital. So today we will be studying what is the cost of debenture capital. Okay, so we know what are debentures, we know what is capital. Okay, we know that how the company raises the finance through issuing debentures. Now let us study first the theoretical part as to what is the cost involved, okay, by the company in order to raise the debenture finance with the help of issuing debentures. So let us understand first what is the meaning of cost of debenture capital or debt. Rate of interest payable by a company on the debentures is the cost of the capital in case of debentures issued by the company. See students, debentures is nothing but a loan, in short, a loan taken by the company from the public. And the public who subscribes for such debentures become the debenture holders of the company. So it is like a debt taken by the company, which the company has to repay back. Now, when a loan is taken from the public, in return the company has to pay interest to the debenture holders. So this interest to the debenture holders is nothing but the cost which the company incurs in order when it raises the finance with the help of issuing debentures. So the rate of interest payable is nothing but cost which the company incurs when it is raising the finance with the help of issuing debentures. So first of all, you need to know that when the finance is raised with the help of debentures, the cost involved is nothing but the interest payable by the company. This is the cost to the company for raising the finance with the help of debentures. Next, important points to be considered while calculating cost of debentures. See students, after we studying the theoretical part or as to how we need to calculate the cost of debentures, then we will see the practical part, that is problems. But before that, you need to know certain important points. So every time the cost of debentures is denoted by KD. Now KD, like even in sums, it will be denoted by KD. Now what does K stands for? Remember students, K stands for the cost and D stands for debentures. So whenever KD is given, K stands for cost and D stands for debentures. Now, see, when a company is making the payment of interest, okay, in respect to debentures, when interest is paid by the company to the debenture holders, okay, it is a cost to the company, right? Now, this interest payable by the company to the debenture holders is an expenditure to the company. Cost is nothing but an expenditure. Now, this expenditure is allowed as per the Income Tax Act. Students, in your third semester, we will be dealing with direct tax, where you all will come across those expenses which can be allowed to be deducted from your profits in order to calculate your income tax. So interest on debenture is one such expense which is allowed under the Income Tax Act. When will you derive at an income? When from your profits. Also, when from your incomes, you deduct all your expenses. You derive at the net income or your profit. That profit will be chargeable to tax, right? So interest payable on debentures is an expense, and that expense is an allowable expense. So the second point what we are seeing is taxation is important in finding out cost of debentures, as interest payable is allowed as an expense under Income Tax Act. Okay, now
Excuse me,
while
ma'am. Excuse me, ma'am.
yes,
Some people are waiting in the lobby.
okay, so just give me 2 minutes, I'll go back to the class session room. Okay, so now tell the students to join in. Okay, everyone has joined in? Yes? Yes? Shall we continue, students? Yes, students?
Yes, ma'am.
Yes, ma'am.
Okay. So in this particular slide, we come across that the cost of debentures is denoted by KD. Remember, K is the cost. Even for equity or even for preference shares, the cost is denoted by K. So K is standard. Okay, where K will be denoting the cost, and D is nothing for debentures. Second thing we came across, that interest payable is allowed as an expense under income tax. Okay, see, income you are going to pay on your profits, correct, on your net income. Now how do you derive at your profit? Income minus expenditures. Now which all expenditures are to be deducted? Out of that, interest that you are paying to the debenture holders is an allowable expense, means you can deduct such expense in order to calculate your income on which you have to pay tax. Now next, while calculating cost of debentures, the below needs to be considered. See students, first of all, the cost of debenture funds, you can calculate the cost pre-tax cost, that is before tax. You can calculate the cost of debentures. Post-tax cost, that is after tax, what is the cost of debentures, that can be calculated. So the calculation of debentures can be pre-tax or post-tax. Depending what calculation you have to do, it will be given in the problem. Okay. Next, the nature of the debentures can be irredeemable or redeemable. See, students, redeemable simply means repayable. When I say redeemable word, what does redeemable mean? Repayable. See, when the company is taking loan from the public, this is in very simple language. I'm telling you what is the meaning of debentures. When the company is taking loan from the public, okay, it has to repay back the loan along with the interest. The interest is the cost. It has to repay back the loan. So suppose if a debenture is issued, and the nature of debenture issued is a redeemable debenture, means the company has to repay back the amount to the debenture holders. Which amount? The amount that it has collected or taken or raised initially. When I say irredeemable debentures are issued by the company, that means such amount is not repayable, okay, to the debenture holders. Okay, now, so the nature of debentures, the company can issue either irredeemable debentures, which means that they need not be repayable, and redeemable debentures means it has to be repayable. The amount that has been raised from the debenture holders has to be repayable. Now, debentures can be issued either at par, premium, or discount. Now, what does par means? See, there's a face value to all the debentures that has been issued. So, suppose if the face value is equal to the issue value, suppose if the face value is the nominal value attached to the debenture, this face value, suppose if it is 100, and each debenture is issued at 100, so that means the issue value and the face value is the same. So that means that the debentures are issued at par. When I say premium, means the issue value is more than the face value. Suppose face value is 100, the issue value is 110. So this 10 rupees is the premium. So premium means when the issue of debenture is more than the face value. And discount means when the debentures are issued less than the face value. Suppose the face value is rupees 100 and the debentures are issued at 90. That means the debentures are issued at a discount. Discount means if they are issued at a price which is less than the face value. So these all, whatever I'm explaining, are very important terms that you'll need to know before we solve problem on cost of debentures. So just remember, in exam they can ask you to calculate the cost of debt funds either before tax or after tax. Depending on the question, your solution will be likewise. Similarly, the nature of debentures can be irredeemable or redeemable. When I say irredeemable means they are never repaid back. It is repayable. That is, it is not repayable back by the company. When I say redeemable debentures means such debentures, the amount that is being taken from debentures holders has to be repaid back by the company. Next, debentures can be issued at par, premium, discount. So when I say a debenture is issued at par, then just think that the issue price and face value is same. When I have said that the company is issuing debentures at premium, means the company is issued debenture more than its face value. When I say discount, means the debentures are issued at a value which is less than the face value. Now let us move ahead. Now, nature of debentures, let us, in whatever I have explained already, let us see that furthermore. When I say irredeemable debentures, what is the meaning? Those debentures which are not repayable at the end of definite period. Usually these debentures are repayable only when the company goes into liquidation. See students, debentures can be issued for a period of maybe 10 years or 15 years. Okay, now during the tenure of 10 years or 15 years, these irredeemable debentures are not repayable. So that is why they're telling at the end of definite period. Suppose the number of period for which the debentures are issued are 15, 20 years. So within this 20 years, this debenture amount is not repayable. Only when the company goes into liquidation when the company is completely dissolved, that time the amount is of debentures can be repayable back to the debenture holders by the company. So this is irredeemable debentures. Why am I repeating this again and again? Because when we solve problems on cost of debentures, these terms are very important. Next, redeemable debentures. Those debentures which are repayable at the end of definite period. Usually these debentures are payable at an expiry of their term. Suppose if the term of a debenture is issued for suppose for 10 years. So at 10th year, the debenture holders will get back their amount that they had lended initially to the company. Okay, so expiry of the term means suppose if it is issued for 10 years, at the end of 10 years, 15 years at the end of 15 years, 20 years at the end of 20 years. Such debentures can be redeemed at par, premium or at discount. See, here the question of, in case of irredeemable, the question of repayment at par, premium, discount doesn't come into question itself because they are not payable. But in irredeemable debentures, when the company borrows the money, it can borrow either at par, premium, discount. Now, when the company has to repay back the money to the debenture holders, the company can repay back. See, just remember, redeemable is nothing but repayment. So the company can repay back the amount to the debenture holders either at par, premium, or discount. Okay, at the expiry of their term. So at the end of 10th year, whatever amount the company has taken initially, the company can repay back either at par, means the same amount can be repaid back, premium. Suppose if the amount collected was, suppose 1 lakh, it is repaying 1,20,000. So 20,000 is the premium. And suppose at discount, suppose the company had taken the debentures at 1 lakh and it is repaying back 90,000. So this 10,000 is a discount. So either the repayment can happen at par, premium or discount. Next, debentures issued at par, premium, discount. Let us understand this. Okay, what is the meaning of par, premium, discount? We have already seen, but let us further in detail understand it. Now, when the debentures are issued at par, what does it mean? When the amount collected for it is equal to the nominal value, that is face value of the debentures. For example, issue of rupees 2,000 debenture for rupees 2,000. The face value is 2,000. The amount collected is 2,000. That the issue price is equal to the face value. We say debentures are issued at par. So just remember, at par means the issue price and the face value are going to be equal. Your IP is nothing but the issue price and FV is nothing but the face value or par value. Next, premium. When I say, or when a problem arises that the debentures are issued at premium, what are you supposed to understand? If debentures are issued at a price more than its face value or nominal value, such an issue is called as issue at a premium. So for example, if a debenture of 1000 is offered at 1050, it is said to be that it is issued at a premium. So when your IP is greater than FV, so IP, when your face value is greater than, when your issue price is greater than your face value, such excess is your premium. Similarly, debentures issued at discount. So when debentures are issued by a company at a price which is less than its nominal value, it is said to be issued at discount. So for example, if a debenture of 2000 is offered to a public at 1950, so this 1950 is said to be issued at discount because the original value is 2000 rupees. So where IP is less than FV, it is said to be issued at discount. So students, again I'm repeating, these terms are very important when you solve the problems. Next. Now in this slide, what we have seen is debentures issued at par premium discount. That is when the company is raising the finance. That is at the initial stage where the company wants finance. Now in the next slide, we are going to see when the company at the end of the expiry term, that is at the end of the term, end of the definite period for which the debentures are issued, when the company is repaying back the amount. Okay. Either that is debentures repayable. Instead of redeemed, the redeemed word is nothing but repayment. So debentures repayable at par premium discount. Then what does it mean? In the previous slide, we seen when the company is getting finance. Now when the company is making the payment of the finance that it had borrowed. Okay, see the difference. Now when we say the debentures are redeemed at par, it means when the amount repaid for its value is equal to the nominal value of the debentures. Suppose the repayment is 2000 rupees and company had issued debentures for 2000 rupees. Okay, so here your redemption value and the face value both are same. So we say that the debentures are repaid at par. Next, debentures repaid at premium. So if debentures are repaid at a price more than its nominal value or face value, such repayment is called redeemed at a premium. So for example, if debentures are issued at 1000 and is repaid at 1050, so the 50 rupees is said to be repayment at premium, where your RV is going to be greater than FV. RV is the redemption value, repayment amount. Next is discount. So when debentures are repaid by a company at a price less than its nominal value, that is its face value, it is said to be redeemed at discount. So for example, if a debenture issued at rupees 2000 is repaid for rupees 1950, so the repayment here is happening is less, 50 rupees less. So this is said to be that the debentures are repaid at a discount where RV is less than your FV. So face value is more and the redemption value is less. So this is said to be debentures issued redeemed at par, premium and discount. So while solving the problems, you've got to be very careful in identifying whether the issue is at par, premium, discount. Apart from that, you also need to correctly identify whether the repayment is happening at par, premium or discount. Next, we are going to come on the practical part or practical approach of how to solve the cost of debentures. Okay, so first we take the set of how to calculate cost of irredeemable debentures pre-tax. Now in my first slide, if you'll remember, I have told you all that the calculation of cost that can be asked in the exam can be either pre-tax or post-tax. So first we will see calculation of pre-tax, that too in the nature of irredeemable debentures. Again, I'm repeating, irredeemable debentures are nothing but those debentures where the repayment is not happening. Okay, now how do you calculate cost of that? So before I tell you the formula, I just want to know from you all. Can any student tell me what is the cost of debentures? Just forget irredeemable, redeemable. Can anyone tell me what is the cost of debentures usually a company incurs? Yes? Students, can you all tell me what is the cost of debentures when suppose if Reliance company is issuing debentures, what is the cost it is going to bear? In my first slide, I've explained interest. Okay, so interest is always denoted by I. Interest word starts from I. So the here in FM, the interest word is denoted by I. Okay, now as the student rightly said that interest. So we know that to calculate cost of debentures in a formula there is going to be I, which is interest. Okay, can anyone tell me now against this interest what is the company receiving? When company is issuing debentures, what is company receiving? Company is issuing debentures. In return, what is the company getting from the debenture holders?
Loan.
What it is getting? Students, I couldn't hear. What did you all tell? What is it getting from the company? Oh, sorry. What the company is getting from the debenture holders? Suppose Reliance. Yeah, what did you tell me? Come back again.
Loan.
Loan. Now, loan is, this was a very simple language I explained you debentures, but loan means an amount. Correct? Today I'm a Reliance company. You're correct. Whatever you have said is correct. Suppose there's Reliance company wants finance. Okay, so it will issue debentures. Now, when it is issuing debentures, the cost involved is I, interest. Very good. In return, what the company, Reliance company, is going to get? Finance. Finance from whom? From the debenture holders. Correct? Or loan. That is in very simple terms. I explained you what is debentures, but in return it is going to get money from the debenture holders. So this money it is getting only when the company is issuing the debentures. Correct? If company is not issuing debentures, if company is not declaring to the public that I want amount of loan in the form of issuing debentures, it will not get. Now this loan amount, as you said, or this finance what the company is getting is called net proceeds. Proceeds means something that is coming to the company. Okay, so the cost of debentures, the formula will include interest I, and second the amount of finance, that is nothing but net proceeds. Net proceeds is nothing but the debentures are sold, at what price they are sold, that value the company will be receiving from the debenture holders. So net proceeds. And this is pre-tax. Pre-tax means before tax. So the T, tax is always denoted by the letter T. Okay, now the tax will not come into picture at all because it is pre-tax, before tax. So tax will not come into the picture. Now, since it is irredeemable, can anyone tell me RV, what we have seen, will it come into picture or no? Irredeemable means it is not repayable. So in a previous slide, we have seen something called as RV, redemption value. Can anyone tell me, will RV come in a formula? Yes?
No, ma'am.
No. So let us see at our right hand side what is the formula for calculating KD. KD stands for cost of debentures. So cost of debentures is nothing but I. I is nothing but interest divided by net proceeds. Net proceeds is nothing but value at which the debentures are sold, and the money that you're getting from the debenture holders is your net proceeds into 100. Into 100. So where I is interest payable, N is the net proceeds, price at which debentures are sold. Here T has not come into picture. Here RV is not come into picture. T is not come into picture because it is pre-tax, before tax. So T is not come. RV is not come into picture because it is irredeemable debentures. See, I just don't want you all to simply, by heart the formula. Because in exam, if you may get confused between the formulas. So you can use your common sense when they have asked you cost of irredeemable debentures. First, see what is the cost. Cost is your I. Okay. In return of debentures, when you're issuing, what you're going to get? Net proceeds in 200. Since it is pre-tax, T is not come. Since it is irredeemable, RV is not come into the formula. Okay. Now, as we know that debentures can be issued at par, premium, discount. Whatever value it is issued at, that is the amount you're going to receive from the public. So this is net proceeds. So suppose if you're issuing at par, how are you going to calculate the net proceeds? You know, it is issued at par means that it is issue price is equal to the face value. That I've already explained in my previous slide. Now, how do you calculate net proceeds? So students, just let me first explain to you all. Okay. Now, suppose there's Reliance company and it is issuing debentures. Suppose it is issuing debentures at par. So it wants, suppose 1 lakh rupees. Okay. It is issuing 1 lakh. It is selling debentures worth rupees 1 lakh to the public. Now the public has to subscribe for this debentures in order to give money of 1 lakh to the company. Now, to do this process, to do the process of issuing debentures, okay, there is a process, there is a formalities that the Reliance company has to follow. In order to get 1 lakh, it has to do little expenditure in this entire process of issuing debentures, collecting the money, all these expenses it has to bear. Now, suppose it has borne expense of suppose 5,000 rupees. It wants 1 lakh from public. It has done an expenditure of 5,000. So what is the net proceeds the company is getting? Can we tell the company is getting 1 lakh full as income, as a proceeds? No. What will be the net proceeds? Gross proceeds will be 1 lakh rupees. Now 5,000 is the expenditure that the company is making in respect of all these procedures of getting things done. Okay, all the issue expenses. In issuing the debentures, what all expenses are incurred? Maybe brokerage, commission, underwriting, flotation cost, whatever expenses are incurred. It has to minus from the proceeds in order to get the net proceeds. Do you all agree? See students, whenever the company, now 1 lakh rupees the company wants, 5,000 expenditure it has incurred in getting that amount of 1 lakh. So what is going to be the net proceeds, students? Yes?
95,000.
95,000. So net proceeds is nothing but whatever value the company is getting from the public, from the debenture holders, minus whatever expenses the company has incurred for making that issue, for selling the debentures, whatever expense the company is incurring. So remember, when the debentures are issued at par, how you're going to calculate net proceeds? Face value of debentures minus the expense on issue. Expense on issue or issue expenses, you can say. Like if the company is selling the debentures through a broker, so brokerage, or commission agent, so commission, underwriting, whatever expenses on issue, that has to be minus. Then we get net proceeds. Okay. Next is premium. If debentures are issued at premium, what will be on net proceeds? First of all, it will be the face value of debentures plus the premium on the issue of debentures minus the issue expenses. Suppose students, 100 rupees debenture, each debenture for 100 rupees is being issued for 110, is sold by the company for 110. So what will be the net proceeds? 100 plus this 10 rupees, because face value 100 plus this 10 rupees premium minus the issue expenses. That will be the net proceeds. So why we are doing a plus here? Did everyone understand the logic? Why we are adding the face value and the premium amount? Yes? Yes, students?
Yes, ma'am.
Okay. Similarly, when the debentures are issued at discount, how do you calculate the net proceeds? So net proceeds is nothing but face value of debentures minus discount on issue of debentures. So suppose 100 rupees is the face value, but I'm selling the debentures at 90 rupees. So what is the discount amount? 10 rupees. So face value 100 minus 10 minus the issue expenses. So this is going to be the net amount I'm going to receive from the debenture holders. Did everyone understand the logic of why we minused here? Because we are issuing it at discount. Is this clear, students? Is this particular slide clear to everyone?
Yes, ma'am.
Okay, so we will be solving problems on this. First, I'll complete explaining the formulas under each category of debentures, and then we will go to the problems on cost of debentures. So again, I'm repeating, cost of irredeemable debentures pre-tax, the formula is KD is equals to I divided by NP into 100. We know how to calculate NP. Next, cost of irredeemable debentures post-tax. Now, post-tax means what, students? After tax. Okay. Now can anyone tell me, just tell me the elements that will be there in the formula. I'm not telling you what is going to be the formula. Just logically, you all tell me what all should be in the formula. So, cost of debentures. So, what is the cost? What should be in the formula? First thing, what is the cost?
Interest.
Yes, students?
Interest.
What should be the cost?
Interest.
Very good. Then, when the company is selling debentures, in return, what it is going to get from the debenture holders?
Finance.
Yes? Finance, which we call it, the word for that is what? Net proceeds. Okay. Now, post-tax. So, what is going to come in the picture when there is post-tax?
T.
T. So, let us look into our formula. So, KD is nothing but cost of debentures is equal to I divided by NP into, in the bracket, 1 minus T, that is tax rate, 1 minus tax rate into 100. Okay, so the formula is the same as the formula we see in cost of irredeemable debentures pre-tax. But what is the difference? Only here one addition has become, that is you have to just multiply it with 1 minus T because it is post-tax and tax element has to be considered because this expenditure is a allowable expenditure under income tax, that is 1 minus T since it is an allowable expenditure. Now, so again, I stands for interest, T stands for tax, NP stands for net proceeds, that is issue price of debentures. Now, can anyone tell me, suppose in the problem if it is given debentures are issued at par, how are you going to calculate this net proceeds? How will you derive at this net proceeds if the debentures are issued at par? Yes?
Face value plus
Face value
minus the tax. Minus face value minus cost of
face value minus expenses on issue of debenture.
minus
So,
tax.
No, dear. I'm just talking about net proceeds. Tax will be given in the problem. Net proceeds is a calculation that you need to do. In this formula, in the problem, everything will be given. Interest will be given, tax rate will be given. This is a net proceeds which you need to calculate based on the information given in the problem. So net proceeds, if they are issued at par, is nothing but net proceeds means something that you're getting back from the debenture holders when you're selling the debentures to them. So if they're sold at par means they're sold at the face value. So you're going to get face value, no doubt. Sorry. You're going to get face value, no doubt. But minus you have to deduct your expenses on issue or issue expenses. Now, suppose if it is issued at premium. So how will you calculate the net proceeds if it is issued at premium? Can anyone tell me?
Face value plus the premium minus brokerage.
So face value plus premium minus issue expenses. See, issue expenses can be the, for example, it was brokerage, underwriting, commission, floating charges. Okay. Now, if it is at discount, how will I calculate my net proceeds?
Face value minus discount
And
Minus issue
minus brokerage.
minus issue expenses. Okay. See, in exam, not necessarily they give you brokerage. They can give you any other expense which is on issue, underwriting, commission. So just in generally, when you say, you have to say net proceeds while calculating the debentures issued at discount can be your face value minus discount minus the expenses on issue. So this slide, I hope it is clear to everyone. Yes? Yes, students?
Yes, ma'am.
Okay, let us move ahead. Now, cost of redeemable debentures, okay, before tax. Now, can anyone tell me what is the meaning of redeemable debentures? Quick, can anyone tell me what is the meaning of redeemable debentures?
Which is payable for
repayable
given
debenture.
period.
Which is repayable after a definite period, depending on the number of years the debentures are issued. Like when you all take bank loan, you all can take for a period of 10 years loan, 8 years loan, 5 years loan. Similarly, debentures can be issued, redeemable debentures can be issued for a period of 5 years, 10 years, 15 years. Okay. Now, can anyone tell me what all elements will come into the formula now? Since cost of redeemable debentures, let it be redeemable, irredeemable, interest is fixed. Interest is a cost on debentures which is fixed. So I is fixed. Now, will RV come into picture? RV is nothing but the redeemable value, repayment value. So will RV come into the picture? Yes?
Yes, ma'am.
Yes.
Yes, ma'am.
Now when, okay, very good. Now initially when the company is issuing the debentures, okay, what it is going to get when company is selling debentures, what the company is going to get? Yes, proceeds. So there is going to be net proceeds. Okay. Now when I say definite period, suppose the redeemable debentures are issued for 5 years, 10 years. So this definite period or the number of period is denoted by N. So since there is a definite period, since it is a redeemable debentures, the N also is going to come into the picture. So N is the number of years for which the debentures are issued. Now, it is before tax. So will T come into the formula?
No, ma'am.
No, ma'am.
Okay.
No, ma'am.
So let us, very good. So let us see the formula for calculating the KD. So KD is nothing but I, that is your interest, plus RV minus NP divided by N. So RV is nothing but your redeemable value minus net proceeds. See the value, the amount that you had received initially minus the amount that you are paying at the end of the definite period divided by n because n is the number of years after which you're going to make repayment. The whole divided by RV plus NP divided by 2. So you're taking the average of the net proceeds and the repayment value, dividing it by 2 into 100. So your I is interest, RV redeemable value, N number of years, and NP is the net proceeds, means the issue price. When I say net proceeds means initial, students, when the debentures are sold, what is the value in return you're going to get? That is the issue value. What is the value you're going to get from the debenture holders? When I say redeemable value means what the company is going to pay to the debenture holders. Net proceeds is what the debenture holders is going to pay to the company. So again, as I already explained, debentures can be redeemed at par, premium, discount. What is par? You all know. What is par is when the redeemable value is equal to the face value. Premium when the redeemable value is more than the face value. Discount when the redeemable value is less than the face value. Now, is this slide clear to everyone? Yes? Yes, students?
Yes, ma'am.
Next, cost of redeemable debenture after tax. Can you all tell me what is going to be additionally added in this particular formula?
Tax,
Yes?
ma'am. T.
T. So remember the formula remains the same, only you're going to add 1 minus T because it is after tax, and tax, this expenditure is deductible, allowable under income tax, therefore 1 minus T. Rest everything remains the same. First you're going to take the difference between what you have to pay, what you have received, divided by the number of years, and then you're going to take the average of what you have to pay and what you have received divided by 2. Rest formula remains the same. Is this clear? Yes?
Yes, ma'am.
Next. So let us just take a quick recap of all the formulas, whatever we have studied for calculating KD. Can anyone tell me what is KD? What is the meaning of KD?
Cost of
Cost
debenture.
of debentures.
Okay, so quickly when we we'll revise. Cost of debentures can be either irredeemable, they can be the nature of debentures issued can be irredeemable or redeemable. If it is irredeemable, you have to check in the problem whether it is given before tax or after tax. If it is given before tax, then your cost will be nothing but your interest divided by net proceeds into 100. If it is after tax, you have to use the same formula as before tax, but just multiply it by n minus t because tax is involved. Similarly, if it is redeemable debentures, then you have to check in the problem whether they have asked you for before tax or after tax. If they have asked you for before tax, then your formula is going to be I plus RV minus NP divided by N, the whole divided by RV plus NP divided by 2 into 100. Now, if it is after tax, the formula is going to be same as before tax, only you're going to multiply 1 minus T. That is it. Then this is the 4 formulas that you have for calculating the cost of debentures depending upon what is asked in the problem. They can either ask you redeemable, irredeemable, after tax, before tax. You have to just identify what is the nature of debenture first in the problem. Second, whether they have asked you before tax or after tax. Okay, based on that, select the formula, substitute the figures in the formula, and get the answer for cost of debentures. Okay. Just an important note which you need to consider while solving the problems is interest payable on debentures is always calculated on face value of debentures. See students, if the interest is at 9%, okay, if the interest is at 9% and face value is 100, you always need to calculate interest on 100, which is the face value. Even if it is issued at a premium or discount, remember, interest, irrespective if the debentures are issued at premium, discount, you always need to calculate interest on the face value of debentures, that is at par. So interest, this 9% will always be calculated on 100, which is the face value, and not on maybe 110 or 90 rupees. So interest is always calculated on face value of debentures. This is very, very important. Note that you'll need to know. So is this particular theory part on cost of calculating the debenture capital, is this clear to everyone? Yes? Yes, students?
Yes, ma'am.
Okay. So students, in our next class, we will be dealing with the problems on cost of debentures, and then we will move ahead with cost of preference, equity, and so on. Now, just I want to know whether you all have understood or no. So can anyone tell me what does I stands for?
Interest.
I stands for? Now who's
Interest.
going to pay the interest? Who's going to pay the interest?
Company.
Company.
Yes?
Company.
Company.
Very good. What does NP stands for?
Net proceeds.
Net
Can in
proceed.
simple language you tell me what is the meaning of net proceeds? What does net proceed means? Yes?
The
It is
amount
a
which
Money,
is
ma'am.
raised by a
the
company.
equivalent by public to
Capital.
Net proceeds means the
Ma'am, it is a
amount.
debenture. At what price it is sold? Whether
Very good. So what the company is going to get when it is selling the debentures? Okay. What value it is going to receive, the company is receiving from the debenture holders. Can anyone tell me what is the meaning of RV?
Redeemable value, which company is payable to the public.
To the debenture holders. Okay, we use better word debenture holders. To explain y'all, initially I've used the word public loan, but in better terms, when the public is subscribing for the debentures or purchasing those debentures, they become the debenture holders of the company. Okay, because they're holding company's debenture, therefore they are termed as debenture holders. Okay, now what this N stands for, students? This N,
Number of
years.
Number of
okay, can anyone tell me logically why this N is not used in the formula of irredeemable debentures?
There is no repayment of amount, ma'am.
Very good. So very good, students, you all have correctly answered. So thank you so much, students. We are done for the session for today. Thank you.